Will oil prices stay in check, or is another spike coming? The U.S. is set to release 172 million barrels from the Strategic Petroleum Reserve, and that move could ripple through your portfolio. Here's the context. Tensions tied to the Iran conflict have raised the risk of supply disruptions. The White House plans a large draw from the SPR to cushion markets, stabilize prices, and limit knock-on effects to inflation, interest rates, and risk assets. The reserve holds about 415 million barrels today, well below its 714 million barrel capacity. A 172 million draw would cut inventories by roughly 41% and leave around 243 million barrels. That scale signals a firm intent to backstop supply and cool price shocks. What should investors watch? The size matters, but the cadence matters more. Markets will focus on the delivery schedule, which Gulf Coast sites supply barrels, and whether the release is a straight sale or a time-limited exchange that gets replenished later. Coordination with allies that hold strategic reserves could magnify the impact and smooth global balances. A steady, predictable flow can cap spikes more effectively than a one-off surge. Expect mixed sector reactions. Lower crude tends to pressure upstream producers, but can lift refiners if crack spreads hold. Airlines, shippers, and logistics often benefit from cheaper fuel. Chemicals and transport can see input cost relief. Meanwhile, oilfield services may face softer activity if price expectations reset. Macro signals matter too. A release of this size is modestly disinflationary at the margin. That can influence rate expectations, credit spreads, and equity leadership. Treasury yields, break-even inflation, and the dollar may all adjust as traders reprice the path of energy costs. Petrocurrencies can weaken if oil softens. Commodity ETFs and futures curves may shift toward contango if supply feels abundant. So what's the practical takeaway? Avoid binary bets on crude. Balance energy exposure between producers and users to smooth outcomes. Prioritize companies with strong balance sheets and durable cash flows in volatile energy tapes. Track the SPR delivery details and any allied coordination for clues on duration and depth. Watch gasoline prices, inflation readings, and Fed rhetoric for second-order effects. If you use commodities in a portfolio, review ETF structure, roll costs, and curve shape before you add exposure. For a deeper breakdown of the numbers, the mechanics, and the market playbook, read the full article at finlitica.com.